Hello everyone, today is Friday, September 10th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If this is your first time tuning into one of these videos, welcome. Thanks for joining us. It's nice to have you here. Here's how we break up our analysis. We start in part one where we look at everything that went on this week in markets. So we look at all of the tables here and go through correlations, sector performance, equity market performance, credit markets, all the good stuff, and pick apart everything that sort of stands out, looks different or interesting or unusual. And then in part two, we jump into the charts. We put everything from part one into context and try and best sort of position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into some of the headlines from this week. A very equity market focused headline reel here. The kind of top level highlight is we have stocks in pullback mode, and in 2021 it's amazing that a 2% pullback from highs puts us in pullback mode, but this is the environment that we're in. So we see stocks now a few percent off of highs. I think the Dow Jones closed down 5 days in a row, and that speaks to the industrial sort of underperforming and perhaps kind of dragging or being the real sort of heavyweight here to the downside. And we also saw the highest weekly VIX close in about 3 months, and that is sort of notable here as we go out on into the weekend over 20. So we're going to talk about all of this in just a moment here and throughout this video. So first things first, let's take a look at just the broad equity market, the major averages, how they performed on the week. And if we look at the right-hand column here, you can see everything was in the red. It was the Russell 2000 and the Dow Jones both finishing lower by 2.5% this week. So they were the laggards. They were the underperformers. Technically, Nasdaq and international stocks actually were the two sort of relative leaders here. But also take a look at the 1 month numbers. Now you can see the Dow Jones going red, the Russell 2000 in the red as well. S&P 500 looking like it wants to turn red. So we're starting to get negative performance looking back over the past 1 month if the sellers keep their pressure up. So that's how we performed. If we take a look under the hood of the market, we look at market internals, how the average stock, how the broad sort of swath of stocks are doing. We can see that there was actually some, more improvement or things look a little better underneath the market averages. And when you look at market internals, we see a bunch of green here in terms of the stocks hitting 52-week highs minus the number of stocks hitting 52-week lows. That is to say, there are more stocks making new 52-week highs than there are lows. The total number on the week was about 430. Again, solid number. It's positive. It's triple digits, but we always like to say in the strongest markets, we want to get over 4. We want to get to that comma. We want to get over 1,000. So we're certainly not right there. We're not there yet. And we are seeing these numbers sort of taper off a little bit. So that's certainly going to be something I'll be paying attention to as we go through the month of September. You can see the AD line here was much weaker. So on average here, the stocks were heading lower this week. And if we look at the percentage of S&P 500 stocks over a 20 SMA, we can see this is back down to kind of the lowest number we've seen in quite some time, about 39.4%. If we take a look at those 52-week highs minus lows, you can see that we do have this uptrend. This is the cumulative sort of view here. So what we do is we sum up every day from the prior day, and we just try and develop a nice kind of aggregate trend here, and we essentially want to see this trend go up and to the right in the healthiest market environments, and it is still doing that. You can see again we're slowing down just a little bit here, but I'm not going to nitpick. This still looks pretty positive here underneath the hood. Now, if we take a look at sector performance, there's certainly nothing to get excited about this week. Every single sector was in the red by the end of the week. Consumer discretionary fared the best here, was only down marginally, minus 0.3%. Financials, second spot, minus 1.21%, and consumer staples, minus 1.29%. On the downside, we had real estate, we had healthcare, we had industrials down anywhere from 2.5% to almost 4% this week. Everything in the red, and again, you can see in the 1 month numbers, we're starting to see a few more sectors creep into negative territory here, looking back over the past 1 month of trading. Let's take a look at correlations next. So correlations, the elephant in the room is once again the dollar. So if we take a look at this middle column here, UUP, that is the dollar index. And what you're going to notice is this is very strongly inversely correlated to just about everything else on this table. And what that's basically telling you here is that the dollar is driving a lot of the action. The dollar was rallying this week and stocks were falling. Even gold, silver, Bitcoin, right down the list, everything there was kind of falling on the heels of a rising dollar. Now, the dollar's not breaking out. It's not at new highs or anything like that, but just that movement, I think it was up about 0.5%, at least the index was. And that certainly is certainly driving some of the narrative here. I think the other interesting note here is Bitcoin at the very, very bottom row. Take a look at the strongly positive correlation that's going on here to equity markets. So we're basically seeing Bitcoin right now trade very much in line with risk assets. And we saw the Bitcoin sell-off, I think, come a little bit earlier than when the market started to sell off. And they're both kind of moving in lockstep to one another right now. Again, could be a symptom of what that dollar is doing. Now, if we take a look at volatility, it's up, and up across the curve this week. So we're over 20 going into the weekend, almost 21. So again, that's the highest weekly close in a few months. And across the curve, basically, you can see just going out in time, the VIX term structure is priced more and more into the mid-20s. That's expected that we would have higher prices out in time as there's more uncertainty out there. But certainly, seeing this back over 20 starts to give us a little pause here on the equity market side. If we take a look at interest rates and credit, so we saw yields up across the board. Not a whole lot, though. There really wasn't a whole lot of movement in the bond market this week, which some respect might be a good thing. We're not seeing the bond market, the credit markets really freak out right here. So that is constructive in kind of a related sense is, if we see credit markets tightening and falling apart while equity markets start to pull back, that's always a little bit more of a concern. We're not seeing that right now. So that to me is on the margins a good thing. If we take a look at dollar and commodities here, you can see the dollar again was up. Dollar index was up almost 0.6% this week. Gold was down. Silver was down. Bitcoin down sharply, double digits. Ag was down. Crude oil and natural gas, though, take a look at these two standouts, especially natural gas, but both of them really are bucking the trend here on, rising dollar, which usually puts pressure on commodities. We're not seeing that pressure really stand out here. We see both of those standing out to the upside this week. So that is certainly noticeable. Take a look at the 1 month return here for natural gas, up 26%, and now the 1 year return up 43%. Look at the report card across all metrics here, and it was pretty constructive. So this is, sort of the unusual thing, and this is why it pays to have sort of a multi-dimensional lens here on how we analyze markets. If you're just looking at the indices this week, everything's red across the board. You probably think, oh, it's a totally crummy week out there. But when you really kind of look at some of these other slices of the market, breadth, different sectors, credit markets, you actually see things weren't so bad this week. It doesn't mean we can't transition to a tougher, rougher environment over the next couple of weeks, but it just means as we see the data right now, things aren't so bad. So that's kind of the report card there. We're going to dig in more to the market environment in just a moment. If we finish off here with our trading systems, these are our algorithms that are trading and investing in the market for us here at the Trade Risk. We've got two of them. The first one at the top there is our longer term system. It is still very much interested in this market. It's still exposed to this market. It is invested almost fully, 95% invested right now, small sliver of cash, but it is still rotating through positions, still having a great year and enjoying this broad uptrend in markets. And our shorter term system, you can see actually is starting to lean into the long side of the market as well right here on this dip or on this pullback that we're seeing. It's 57% invested, so it's got a little bit more room to fill up there if it wants to. So that's how we're positioned. And with that, we'll be back here in just a moment with part two. One of the most common questions I get from traders after listening to one of our market analysis videos goes a little something like this. Evan, there's so much information. There's so much to consider. Should I be bullish or should I be bearish? And I respect the question because there is always a lot of information to think about, and it's almost always conflicting. That's why these videos are designed to help you objectively frame out markets, but it is on you to execute and pull the trigger based on all the information that we talk about. Now, if you're interested in the stocks and ETFs that I am personally allocating to, then it is our Merlin and Lamerick trading systems. Merlin was built to invest aggressively during healthy market environments and then step aside and get defensive to avoid large corrections. It patiently holds trades for about a month at a time, and it primarily trades growth stocks. You can have a full-time job and easily execute on the signals after the market closes. Our Lamerick trading system is a much shorter term tactical strategy. It holds trades on average for just 4 days, and it trades long and short, which allows it to perform well in more difficult, choppy, and volatile markets, and still no intraday screen watching is required. If you want to learn more about these trading systems, head to thetraderisk.com/systems. There's also a link appearing in the top right hand of your screen. When you sign up for one of our trading systems, you'll be given a login to our website. You can access our nightly trade reports. You'll be put on an email list so you can easily learn more about the trading systems and follow along easily after the market closes. We also have 14-day free trials available. Head to thetraderisk.com/systems. And now let's get back to the show. All right, we are back here. We've got TC2000 open. We're looking at our equity market grid, and we've got our custom smart trend filters indicator applied to all of these charts. Those are the multicolored dots. Just helps us very simply, easily, and visually understand trend and trend strength. The white dotted lines, white dashed lines on this chart is price itself, and we are looking at a weekly time frame. So when we look here at a weekly time frame, remember we just talked about the pullback that we are seeing here in the market, but notice on the weekly time frame we are not seeing any change of character here in terms of trend outlook. The S&P 500 has been in a bullish positioning here since the end of 2020. So if you looked at this simple heuristic here and said, I only want to be long the S&P 500 so long as the weekly term trend based on our trend filter here is positive, then that would have served you pretty darn well to just kind of stick in here for the ride. You can see we are seeing price dip closer to our trend, but no change at this time. Same thing for the Nasdaq, although it's been a little bit bumpier here at different various parts of the year, but still we are even further away from our trend spot, and you can see again still just green here. And then if we look at IWM, well, this is basically what we've been seeing all year as well. It's just yellow, yellow, yellow printed here, and what that tells us is uncertainty. It tells us there's mixed signals, that there's basically a lack of trend, and that hasn't changed, still hasn't changed. We're waiting on a break here, a change of color, if you will, for this indicator, and right now we're trading right into our trend line. And so we are just waiting, and there's no change. Same thing with ACWX. This one's been choppy over the recent weeks here. You can see again, still yellow printed, and that's how we're looking. Now, this is the weekly time frame. Let's go to a smaller time frame. Let's go down to a daily chart. And now we start to see things change a little bit. We start to see the S&P 500 now breaking below its trend and starting to print some yellow dots here on the daily time frame. So this starts to tell us now, okay, in the shorter term, depending on your time frame, so maybe more on a swing trading basis, short-term swing trading basis, there's a bit more turbulence to start looking at and thinking about here as the sellers start to push us down below 4,500. Same thing for the Nasdaq, although as you can see here, it is still above trend and it hasn't turned just yet, still printing green dots here. So the Nasdaq certainly faring the best. Russell 2000 was in green, but again, flipped lower this week into the end of the week, still printing yellow. ACWX is actually holding up. It's in fact right along with the Nasdaq, still holding green here in terms of its daily outlook. So both of these outperforming on a relative basis. So that's our simple trend volume over time heuristic. Let's take a look at some candlestick analysis. Let's get a little bit tighter in our analysis. So let's go to the S&P 500. Let's go to a daily chart, and let's look at this little roadmap that we drew out last week, not last week because I wasn't here last week, but the week before. And we had this level of reference here, right? So we had this level of reference, which was right around this 44.75. That was approximately where we topped out in the market on August 16th. We pulled back, we broke out, we retested it, and then we kind of pushed to new highs. Well, that was the level we really wanted to see hold to keep kind of this upper level momentum intact. But take a look at how we closed Friday. Of course, this is a pretty ugly looking session here. We started the day positive. We tried to rally on the open, and then we reversed and essentially sunk lower and closed at the dead lows of the day. So going into the weekend, this is about as bearish of a candle as you could imagine. So this now is in violation of our kind of upper level momentum. Now notice this all works together because just like we came from, this hasn't really spilled over into the daily. It's just now starting to spill over to the daily trend. It's obviously nowhere near the weekly trend. So again, this all kind of plays together on how close you're measuring and trading markets and what your time frame is. But in the very short term here, in terms of a pure price supply and demand perspective, this is obviously a strike against the market here as it violates this breakout zone and pulls back and closes weak. So to me, buyers need to get back above this level as quickly as possible. We want to see this market closing back over, call it 44.80, even call it 4,500 if you just want to give it a little more room and, confirmation. You want to get this market back over and up towards basically the day's highs or where we open the session on Friday. And if we don't do that, then, we start to look at our next levels down here, and that brings us to potentially another 2% sell-off, which would get us back down to about 43.80, which would be again kind of back to these August lows here where dip buyers have stepped in and the prior breakout zone from July. So that's kind of the levels, the landscape here on how I'm framing out this market over the short term. And, we're still just going to have to kind of wait and see. We're down 4 days in a row. I mean, the other interesting thing, I think a lot of people are kind of catching on and talking a lot more about options expiration. And so that's kind of interesting here. And I meant to mention this more at the top of the video. If I clean up this board though, we've been seeing the market sort of sell off basically that week going into OpX. So essentially right into about the 14th, 15th of every month is where we kind of top out and then sell off for a few days. We did it the past basically 4 months now in a row. And this sell-off though, if you notice, started on really the start of this month. So it started a lot earlier. Now we do have OpX, obviously coming up, but we're much earlier in our sell-off. So maybe that means we're going to see a steeper, correction this time, or a deeper pullback, or maybe the pattern's going to be kind of thrown off here. I am just sort of an observer on this and don't have any deep insights, but that's certainly the dynamic we've seen play out here. And then of course you could throw in, seasonals as well. In September, traditionally a pretty seasonally weak month on the year. So there's a bunch of things to potentially put a little bit of a rain cloud on this price action. So that's kind of the frame out here on the S&P 500. If we look at the Russell, the Russell here had this nice act of this nice run from the lows here. It rallied basically 9% from swing low to swing high recently, and now it's again pulling back here and retracing a bit of that. It's off 3.5% from its highs. This is a good level it needs to hold now over this 220, 222 zone. It's kind of the midpoint of the range. A lot of supply that trades in here. So ideally, if the buyers are going to make a stand here for the Russell, it happens early next week and we can stay above 220, because that's what's going to keep this, hopefully kind of, at the top end of this range. Last but not least, the Nasdaq 100, you can see, is kind of the strongest on a relative basis. Notice it's not really breaking or violating any prior levels here. It's still holding up. It clearly, you know, it broke this 4-day range, this 5-day range today. So that obviously wasn't good, but it's not losing these prior breakout levels from earlier in August, and it's still kind of holding up relative. Obviously, we'll need to take this one day at a time and just kind of measure and map this as we go along, but the Q's acting as a bit of a resilient place here over the past week. So that is the landscape for the overall market. Hopefully that was helpful. Let's take a look at a few other markets. Let's take a look at VIX. You can see this is the VIX that I was talking about, closing back up at, especially on a weekly chart here. So we've been getting a lot of fades. Every time we get pushed up on this VIX over 20, it basically aggressively gets faded. Notice this week, though, we did not see that fade. Now, obviously, it could turn into something like this June week where we had a strong close over 20, and then take a look at the very next week, VIX was down 25%. That's obviously what you're cheering for if you're bullish on this market. But right now, we're not seeing the VIX kind of slow down here. So going to be a little bit cautious when VIX is over 20. Again, I don't know that it's, if you're a short-term trader, I don't know that you want to be selling everything right now. That has, you know, the 4 or 5 day pullback has sort of happened already. But this does, you know, again, just get to the more dicey zone if VIX wants to stay bid over 20. So be a little bit cautious on that. If we take a look at TLT, this one's interesting as well. So TLT kind of really forming out this holding pattern here. It's been chopping around now for the past few months. So basically you can see we've got this kind of triangle building out here, and we're just kind of waiting to see how this ends up resolving itself. It looks, you know, on the fringes here, kind of bullish. Looks like it wants to potentially, you know, resolve to the upside, but it's still too early to tell. I don't have a position in this or anything right now, but it, you know, it looks like it could be a continuation pattern of sorts, but we're still waiting. So we're going to just keep an eye on it, watch this compression, and keep, you know, watching this every single week. And silver is another one I wanted to talk to, which is looking pretty horrible here. If I look at silver on a weekly chart now, you can see this weekly candle here is kind of breaking back below the prior week. The last 3 weeks look like a little bit of a bear flag here. Then we look back to this range at the lower end here. So it's looking pretty weak. At best, it's just sloppy. I don't have, again, a trade or an opinion or any shorts on this at all, but looking just, again, a little bit heavy. And then if we look at USO, the, you know, price action in the short term is pretty messy in here. I mean, this is just a kind of a just wide trading range, but, you know, again, given what the dollar has done, given what a lot of other commodities did, this actually held up pretty well. So again, if you take it maybe from a weekly perspective here, looks like it's, again, just kind of hanging out, going sideways, consolidating, working off the strong move it had earlier in the year, but just, you know, showing some, you know, immediate term weekly relative strength. Now, let's finish off the video here looking at some industries, some sectors, some things that are standing out. So we have two scans that we run, basically identifying sectors and industries that are making notable moves. Notice nothing is up here on the bullish side. So we didn't pick up any real notable, you know, relative strength performers in terms of industries and sectors. Everything's on the downside. So let's run through a few of them. I'm just going to go to a weekly chart. So you can see aerospace and defense is closing at new multi-month lows. Again, could just be seen as a consolidation pattern. These aren't necessarily all immediate kind of sell actionable ideas. They're just meant to show you some things that are maybe closing at lows or acting on heavy volume. This one is reversing in kind of an outside reversal week here for airports and air services. We've got auto parts breaking to new lows here, kind of back to year-to-date support. This is a defensive area here now, kind of breaking, closing at new multi-month lows. We've got this technology data storage closing at new multi-month lows. We've got drug manufacturers here really seeing a heavy kind of pullback week and closing back down, giving back the past month and a half worth of gains. We see education and training services, which just seems to be totally thrown away, and nobody wants any interest in this sector because it's been totally brutalized here since February of this year, down 67%. Let's take a look at those stocks. I think we've done that before, but there's 50 names in this list. So there you go. If you want to do some knife catching or value or some value hunting, again, do your homework if that's your style. these are the list of stocks that have gotten pretty obliterated in this category. If we take a look at healthcare plans breaking down to new lows here, doing it on heavy volume. We see insurance selling off for the second week in a row, thrusting off of those highs, doing it on heavy volume. Insurance, again, specialty insurance in the financial services sector here, kind of pulling back from highs. We see metal, industrials, again, kind of closing towards lows. And then we see packaged foods continuing their pullback. We see real estate, heavy volume coming in and kind of selling off a bit. Another real estate, REITs pulling back, heavy volume. Finance, telecom, tools, and accessories. That is the list right there, folks, on things that are standing out and notable to the downside. So that's what I've got. Hopefully this video is helpful. Hopefully the roundup here can get you prepared for next week, get you up to date with all the technicals, all the intermarket relationships that are working together. And I'm happy to do these videos every single week. If you like them, do leave a like, a comment, share it if you enjoy the videos. And as always, if you want to stay up to date, you can subscribe to our YouTube channel or follow us at The Trade Risk. Have yourself a great weekend. And don't forget, this Monday, we've got Smarter Trading Season 2 coming out on Monday. So do look forward to that. Thanks so much.